The euro strengthened overnight as Germany and French GDP beat analyst expectations. Markets continue to hold higher as it attempts to break above recent resistance. I'm Brittany Umar, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with The Street, and together we bring you the morning call. Futures are up this morning thanks to German and French GDP coming in better than expected. Markets continuing to hold higher, so could it finally break through resistance?
We keep trying to get above this 1405, 1407 level, which is like the 6-day range, and we haven't been able to. But we've also been doing that, holding higher in the face of bad news. So I'm not saying this German GDP or the French GDP is anything blockbuster or explosive, but it's a bit better than the analyst expectations, a little bit of good news. So it'll be interesting to see if we can finally get above that level, stay above that level, and if we do so, the highs of the year are pretty much right around the corner.
Now, what can we use as clues to make us maybe think that the S&P could be next to break above, its 6-day range? The Qs just broke above it, so could the S&P be next?
Yeah, well, yesterday in the afternoon when the spiders in the market started to come off the lows and got strong, tech was leading the way, and I always like to see that. And then towards the end of the day, tech was actually above the range where the spiders weren't, so I'm like, wow, tomorrow probably could be an up day. If you take a look at the chart real quickly, I'll show you the S&P first. Here is this, cup and handle type pattern that we've been talking about the last few days. Here is that uptrend that was intact ever since this June 4th low, and here is us holding higher. Now, if you get a closer look here, you'll see that we held, okay, let me get this out of the way, we held above the recent breakout. This was the April high, the downtrend that was put in place. We powered through it, and then we showed commitment above it. The 8-day came back in play. The 21-day moved up a little bit. But look, we have yet to be able to get above this level. If you look at this high here, that is 1407. We get above and stay above 1407 for like 60 minutes. I think the bears have to make a decision whether they're going to continue to roll up or cover. And then your next level of interest here is what? 1415 right there. And then the highs of the year is 1422. If you look at the Qs from yesterday, the Qs actually went above that level. This was your last breakout, okay, above resistance, and then you had a nice move higher, and it also held. So it held the 8-day while the 8-day caught up. But if you look here, I know it looks small, but it means something to me. The Qs closed above the recent high here. The recent high on the Qs was what, 66? My eyes are bad, 92, and yesterday it closed above 67. So right there, if we were that weak, they would not have let the Qs get above that level. So to me, with tech leading the way, with high beta in the driver's seat, it makes me a lot more bullish than bearish, and I actually reduce some of my hedges.
And a lot of investors out there are complaining that the VIX is declining. Do you think it's necessarily broken?
I don't think it's a great hedge at all, and I do look at it and I see a lot of people saying, oh, the VIX is in the same spot before the 2000 crash, or the VIX is doing this, the VIX is doing that. I recall in December when we were getting a lot of bad news in the market and the VIX kept going lower and people were like, it's broken, what's going on here, what's going on here? And instead of like reading into it that maybe we're on the cusp of a decent rally, they complained. And then meanwhile, come January, if you remember, you go back to the market here during January through the first quarter, look what happened here. So during this wedge type process, the VIX was really coming in. Everyone was complaining, and look what it was a precursor to, a major move in the first quarter. So here we are on this, longer term chart up here, and the VIX is getting down to that same spot. So I don't think it's telling us it's broken. I think it's saying that we're going to be taking out these highs. It's just a matter of time.
Well, it may be slow, the markets at this time of year, but there's still a lot to like out there. High beta tech stocks are leading the way. Apple and Google both having great days yesterday. Let's start with Apple. After 4 days of consolidation, back on the move yesterday.
Yep, we've had about 3-4 different action areas since they missed on earnings. If you take a look at the chart, you'll see we talked first about whether or not it would hold this lower level, and it did. Those trying to short below 570 had no success, and then it broke above 580.80. That was your time to switch gears. You had a 3-day move up, into some resistance. It held higher. This is when I finally got back in my swing trade right here around 603. You had a nice little action area when it cleared the 617, 620 area, went as high as 625. Then it held higher again. And then yesterday in the price point sheet and basically in here, I said if it gets above 624, 625, you buy it again. It closed at 630. Now it's indicating 633. Next real level here is about 644, which would be interesting if it gets up there and tests it and then relaxes, because then, I don't think that this high of the year is going to stand and we're going to see a lot higher prices here. So you could be an investor in Apple, you could be a swing trader in Apple, and you could be a day trader in Apple and have performance and success if you follow the right tactical plan.
And then there's Google on the go-to list since earnings this quarter. It was another leader yesterday, moving an impressive 16 points, grinded higher all day. So what's the next level to watch?
The old highs of the year, 670. It was definitely, for the first quarter or two, it was frustrating. They missed their earnings twice, but the stock held in there. It did break below the 200-day, so a lot of guys got stopped out, and lost maybe 20 points. Big deal. We trade real time. You could always go back to it. Stocks don't have memories. Then if you look at the chart here, Google did hold this big long-term support right around 560, and then you could have got back involved either when it recrossed the 200 or waited till after earnings. I waited till after earnings, and here you had a nice flag type pattern. You take a closer look and you will see that this was the first time we really said getting tier 1. Tier 2 could be above 618, 620. Then it cleared this downtrend that was put in place since the highs that was put in early January, and then it flagged higher. And then look at look at this day yesterday. Unbelievable, very potent, closed near the highs. It might take a little time to relax again, but I think overall you're going to see this high here of 670. And then if you go to the monthly chart, which is the reason why I loved Google in the beginning, the high was put in back in 2007 with one business. Now it's got 4 or 5 and it's doing really well. It's just breaking and closing above this trend line here. I do think that we take out this area and within the next 9 to 12 months or sooner, we go for this the all-time highs here, which is 747.
And we are seeing some consolidation out of Amazon, but this one still looks healthy. So what are the key levels to know?
Well, hopefully it's just resting. It broke above that 228 to 230 after earnings, and since then it's been a bit choppy, but other things have been working. So let it sit on the side, trade where the action is, and then if it starts to ignite, you go after it. I'm not in Amazon right now. I'm in Apple. I'm in Google, but I'm waiting to pounce. That's what you have to do. You have to be ready to pounce with a plan. You look at the chart of Amazon and you'll see here's where it broke above this last resistance. This was a nice trade after earnings, and now it's hovering higher, just going sideways. There's been some talk about high-level valuation, which I also think the valuation is high, but people are saying, their revenues are immense, and at some point they're going to have better margins, and that's when their net income is going to kick in. So for me, I think that the real level here on this stock is above 238. It starts to get above 238 with volume. That's when I'll get in. If you have some risk and you're willing to put on some portfolio or a portfolio approach, you could be a buyer here. Tier 1 with the stop at 228, and then tier 2 as it clears, 238 for a move to get back the highs of 240, which was put in the day after earnings.
And Baidu has just been acting really well since earnings. The stock has been getting better. The price action showing bullish signs. Is it getting ready for another move higher?
It's flagging really well. My guy's going to be watching it today. There's another price point, another area of interest. Ever since earnings, I know the stock was battered and bruised. We avoided it for a few months, and then it came out with good earnings. And then, you could always reevaluate and see how the composure changes. And the composure changed. It got stronger. It went up. It went sideways. There was commitment. There was follow through. You look at the chart here. This was the earnings. You were out of the way. I don't think we were long Baidu or even really talking about it during much of this mess. But then look at the gap up on earnings. It didn't fill a major portion of it. Your first buy area was when it crossed this 120. Which was that high that was put in after earnings. Then it went sideways again, consolidated. The next area was around 125. And now look how tight this little pattern is here. This stock gets above 131, 132. It could see all the way back to filling this gap here in the mid 140s. So at this particular point, I'm not in Baidu, but it's going to be on my radar for a trade. It's got to clear 132. That's the buy area with some volume.
All right, coming up, we're going to go in the trenches with leading stocks that look ready to make a move higher. But first, a quick commercial break. We'll be right back.
Hello, everybody. My name is Pete Renzulli, Chief Marketing Officer of T3Live.com. Really excited about introducing you to and inviting you to the first T3 Live Active Trader Summit. There's going to be a ton of great content, but the number one reason you want to come is you want to be able to network and associate with other like-minded people who have a burning desire to learn how to be a trader. So I'm going to ask you to make a trade. Trade one Saturday for some of your time to come down and learn strategies, tactics, techniques, and put some faces to the people that you see in the virtual trading floor in T3 Live, and learn to take your trading bigger. Learn how to be a better trader than you are now. Learn the strategies. It's going to be a lot of fun. Go to t3live.com and register. If you would like to join us at the post-event cocktail reception, you can also upgrade to either premium or VIP. That's up to you, but either way, please take advantage of the general admission, 2 free tickets. Bring a friend, bring a neighbor, bring a wife, bring a girlfriend, maybe bring both, but come down and expect to have a great time.
We're going in the trenches with leading stocks that look ready to make a move higher. There is a lot to like out there, including energy names, which have been rewarding investors. Stocks like Exxon, uptrend staying intact. What do you think?
I think the stock looks healthy. I think CVX, Chevron looks healthy. If you look at the chart here, XOM, we've talked about it multiple times and off the charts. Here is the low that was put in June. It's followed a nice methodical uptrend. It broke above resistance. It's actually even higher because it went ex-dividend and they took a chunk out. So we listed it around, I think, 87.90, and now it's holding above. Your next area for traders to buy would be above 88.49. This stock also rewarding equity investors and traders. And
Lennar basing at a higher support level. It also bounced off the 8-day. What's next for this one?
This stock and the group has been providing leadership since the beginning of the year. We were Kramer off the charts talking about what this means for the markets, and this has been one of the leaders. It's been consolidating well. It has a price point in front of it. You take a look at the chart. You know, here was the last move when it broke above this pivot area, which was about 30.12. Went higher, been consolidating, letting the 8-day catch up, and now it's hovering right in front of the highs above 31.85, and this stock makes another move.
And Western Digital continuing to power forward. Is it time for some profit taking here?
I think you could peel some off. This stock to me is extended, and Western Digital and STX, Seagate, they've been unbelievable. And I know you need to let your winners ride, but you never want to chase excitement, and you always want to tear out of some strength. In Western Digital, you know, unbelievable strategy here. You know, gapped up. We talk about big gap, big pro gaps that don't even attempt to get filled. So here is your tier 1. A lot of guys started to get involved either in a tier 2 or just into a tier 1 or above 41. Nice move above the 8-day. I would scale out of some. You want to stick with some because it really is strong. I wouldn't be a buyer up here even though it's showing a lot of strength. I like to sell excitement, not buy it.
And some retail names looking good. Target hovering around the year's high. At what point will it be ready for another move higher?
This one has been stair-stepping higher. We've been talking about it for the last 3 months as you know, as a cost-conscious consumer play. My wife loves going there. I don't know if you go to Target. Target's great. You know, following the Walmart footsteps. That was also doing very well this year. This group also, you know, Costco, Home Depot, Target, Walmart. If you go, but we're talking about Target now. You look at it, it's holding again. All right, last really nice buy area. I remember I was on Bloomberg. I talked about an option strategy. Everyone said the retail sector is dead. I'm like, I like the way this looks. It broke above 58. You know, it's been making a methodical move higher. Now it's holding up. So at this particular point, you know, if it were to clear this area, it could take another stair step. The high and the pivot is 62.97. Watch that for an additional trade. If you're long Target, I think you stay the course.
And Cirrus Logic holding up well as well. Has spent the last 2 weeks at this range. So at what level could we see some buying power really fire up?
This one took a lot of people by surprise. This is an oldie but goodie. We used to trade this back in 2001, 2002. It was unbelievable. And it was reborn. We talk about cyclical patterns. A lot of the old school semi names have been reborn and on the move. And this one gapped up after earnings. It hasn't pulled in. If you take a quick look here, I know it's a lot higher, but my rule is this. You gap up on earnings and you don't attempt to fill these earnings, you have pent up power. Okay, this was your first little trade above this 3-day level. You know, let the 8-day catch up, and now it's hovering really tight. I know if I was short cruise, which I'm not, I'd be shaking in my boots if we started getting above 38.60. That's why above 38.60, longs will look for another entry. And then maybe take a look at the monthly chart here. On the monthly chart, stock really looks unbelievable. The next real level, if it could clear the one we just talked about, doesn't get into the 40s. So, you know, I think this is something that traders are going to stay active with.
All right, let's do some quick hits here. Las Vegas Sands has started to act better, still below all key moving averages. What needs to happen for buyers to stay in the game?
Well, it's showing commitment. We talked about the capitulation lows. That I think was almost like 2 weeks ago. It was in the 36 area, went to 40, and now look at it. Stock is holding in place, holding higher. You know, there's still news out there that they're embezzling money, they're doing money laundering, blah, blah, blah. Who knows? Bottom line is this was the day that we called the bottom out. Here's where you saw some commitment. went higher, stair-stepping again. I'm not long this one, but if it starts getting above 39.96 or 40 again, I'll try it for a trade. You have a big time downtrend that's in play here. So when they break down trends, everyone's saying everyone who's short has to cover, so that creates an action area, and then the next really big level comes in around the 200-day at 45. So I would keep this on the radar for some quick cash.
GLD sold off yesterday, gave back all the gain it made last week. Now what?
I don't know. I'm avoiding. I tried to be long silver. Both the GLD and SLV started acting better. They're up today. I'd say, again, GLD, don't get excited. Don't get, whatever it is. Don't look to be early, because if you're early, you're still getting chopped up. GLDs has to get above 158, 159 with power in order to have any kind of character change.
And then there's Goldman Sachs sitting right in front of the 200-day. Will it be able to reclaim it?
I think so. The banks are acting much better. I'll put up two charts to FAS and Goldman Sachs. I'm long Goldman Sachs. I've traded it a few times from the long side off of these lows. It's showing some commitment. It's showing a little bit of power. If you look here, this was the bottom. It held this lower area. It held the 90-60. And then, it had a really nice move, took out where it failed in earnings right around here. Okay, then it, came back, whatever. This was your flag. I take that day out, and now it's flagging again. 8-day caught up. It's got the 200-day right in front of it. I'm long some, and I will be adding to this stock if it can get above 104.38 with volume, because if it does, you're going to see shorts get squeezed, and you're going to see another move higher, and this could be an additional cash flow trade.
Under Armour used to be a breakout failure, but it's made a great comeback. It's trading above all key moving averages. So is it setting up for another move higher?
It is, and this is, again, another example of how if you get stopped out of a stock and you don't take it into earnings, you could always get re-entries. And Under Armour has been an unbelievable investment. It's been a new issue for the past 5 years. It's been faulty at times. So if you've gotten at it a few times and got back in, fine. If you've been just a holder of it saying, I'm closing my eyes, you've been pretty lucky. If you've been tactically trading, you take a look at it, look what happened here. This was your gap up after earnings, okay? You guys got to remember Red Dog rules. If it does not fill the gap up after earnings, it's in the game, back on the go-to list for higher prices. This one had a quick move higher before correcting. What did it do? It held higher, gave you a green bar. That was your entry. If you didn't enter there, this could have been your entry, and now it's flagging once again, holding above the 8-day, showing relative strength. The stock starts to get above 57.60 or so, it could make another move. The stock's been trading well since earnings, and sometimes that's what companies need. They need to report what they're doing for investors to see, and then that's when new composure can come into play.
And we've talked a lot about LinkedIn and how it's not Facebook, but it's not getting a lot of love from buyers. So where's the next level of support?
This has been, it's a little frustrating, but you have to have a bit of perspective. I would have thought that it would have acted much better, the week after earnings, and this one hasn't. Okay, I know Sperling has been trying to buy the dip. I've been looking at it every now and then. It's been slowly drifting lower, but there's so much negative sentiment about the whole group between Facebook and Zynga, and then last night Groupon, which I'm going to talk about also real quickly because we don't have it on the report. It's just hard to hold up. So if you look here at LinkedIn, I'm not involved in the name, but I am looking very, 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 did I say very, Brittany?
Very.
Very closely at this. So if you look here, you will see, here is your earnings gap. And remember the Red Dog rules about earnings gap? If it holds a big portion of it, that remains bullish in the game. Well, here we are, okay? This was your earnings day. Here was your, it was a nice little trade. It broke out and then failed. This got a lot of traders out of the stock, and now they're all looking at it again saying, can it hold this gap? So some guys are in versus yesterday's low of 103.25. I'm not in that trade yet. At some point, if it starts to take out this little area here, which is about 106, 106.10, I think momentum traders are going to look to get in it for a long and use this 103.25 as your stop. If it goes in and does some kind of Red Dog reversal, that'll also get me interested as long as it keeps the majority of this gap open. So we're watching this very closely. We got to see if there's some commitment here. Overall, company's been public now for a while. It's in the upper end of the range. It's had 3 reports that were pretty on the level, maybe 4, but the last 3 were actually good. So I think institutions are trying to accumulate this and they're trying to stay with it, but the rest of the group has just been disappointing. And lastly, Groupon. It's down, I think, $1.50. It's below the lows. Traders will probably look at it to see if it's priced for death or if there's a possibility of a trade here. Is this Zynga that opened lower and bled all day? I'm not sure. The low here of this entire move was $6.35. I think it was $6 before coming in here. If it doesn't get back above 635, do not even think about getting long it. If it's, 6 is the low and it's trading 620, maybe buy verse 6, you have a 20-cent stop, and who knows, maybe, they keep it in the game on really good earnings. Look what happened here, it was sold. So on lukewarm to bad earnings, it's opening at the lows. Maybe it's priced in. So some guys will be watching it, but make sure you don't just accumulate it. Trade a level versus a level, and above 630, maybe guys that are short thinking it could be a Zynga, get cut in half, will have to get covered, so there could be a trade.
And wrapping things up for today, where's your focus heading into trading?
Well, I'm long. I have 3 longs, 1 short. Everyone on Twitter likes to talk about 6 longs, 5 shorts, this, that, boom, bam, whatever. Guys who aren't in my virtual trading floor, they don't see it. I'm going to try and stay with it. I think it's hard to add to Apple up here, hard to add to Google, just as hard as it is to let it ride. And a lot of us have been riding this Apple since like 603, so we're up 30 points. It's hard not to ring the register on at least some. So I'm going to say trail some and trade some, meaning book some and then let some ride and continue it. And then I'd like to see other patterns, start to come into play where I can make additional cash flow moves like we saw maybe with LVS, maybe with Goldman, maybe even, with the LinkedIn. So there are other places to make quick cash flow, but I do think what's working is holding 6 to 15 positions with hedges around it and managing your trading account as if it's a small little fund or a small little hedge fund. Not just shorting every rally and every time we fail, getting short on the brain and adding, because those are the guys that are breaking their computers and having a very frustrating summer.
And with that said, happy trading everyone and have a great Tuesday.